a huge financial step for China as the country has opened up its $45 trillion financial market to foreign investors. Well, over the weekend, China's central bank issued a license to U.S. credit card company American Express to clear transactions in the Chinese mainland. Well, it's a huge move, as this is the first time this kind of financial license has been issued to any foreign institution. Now, to be clear, the license was issued to Express Technology Services, which is a joint venture between American Express and Chinese fintech firm Lianlian Digitech Company. But the impact on American Express cannot be understated, as the U.S. company will be the first foreign company with access to the Chinese payment market. Well, that payment market has an estimated worth of $27 trillion. Stephen Quarry, the chairman of American Express, said in a statement, "We are pleased to be the first foreign company to receive this license. This approval represents an important step forward in our long-term growth strategy and is a historic moment." And as China is opening its markets to U.S. companies, the U.S. is moving in the opposite direction, with a number of groups encouraging the Trump administration to ban Chinese companies from entering the U.S. altogether. So let's go deeper on this issue and bring in John Quelch, Dean of the Miami School of Business and co-host of Boom Bust, and investigative journalist Ben Swan. John, let's start with you. A huge move we're seeing here, and certainly a big win for American Express. Is this just the beginning of China allowing U.S. companies more access to their markets?
A big win for American Express, ahead of MasterCard and Visa. Also have applications in, but well behind American Express in the process. American Express has been knocking on the door of China for 15 years. To get this privilege is very important. It was really re-emphasized as part and parcel of the trade deal with China earlier this year. It's part of the process of opening up China financial markets to foreign and especially to American companies. But one thing I want to stress is that China has developed very substantial competitors domestically in this payment space, including UnionPay, including Alipay, which is part of Alibaba, WeChat Pay, which is part of Tencent. All of these companies are very well positioned to take advantage of the China market. And American Express, in that respect, is a bit of a latecomer. It's going to have to market itself to not only consumers, but also to banks as partners and also merchants as partners. But I have a lot of confidence in American Express's ability, from decades of experience cracking emerging economies, to be able to get into China and make something important happen.
And they've always been known for their customer service and the experience they provide. Well, Ben, we know that the Trump administration, they've been cracking down on Chinese companies like Huawei. We've talked about it time and time again. But now the administration is doing more than just that, right?
Yeah, that's right. You know, as John pointed out, this deal with American Express is it certainly has been part of that phase one trade deal. But on the other side of it, you have the U.S. going in kind of in the opposite direction, as you mentioned. We've seen not only the crackdown on Huawei, but really the Trump administration has been cracking down on really Chinese companies across the board. In fact, there's an effort right now to delist all Chinese-owned companies from the U.S. stock exchanges. So there's a lot of pushback against China right now, certainly on the political side of things. And part of it is to say, well, let's remove Chinese influence from American companies. And we've even seen it on the social media side, where you have companies like TikTok that are Chinese owned. And there are questions about whether or not those companies should be allowed to operate here. So big questions surrounding that. And I think what we're really seeing is, you know, these two things happening simultaneously. Yes, as the U.S. is kind of trying to push China out, now we're seeing the Chinese, as part of that phase one trade deal, saying we're going to allow some American companies in. So there is a contrast there.
But they are, like you said, taking part or doing their part and with this China One trade deal, or at least attempting to, from what it seems. Now, John, China, they've been moving to get its economy restarted in light of all this, the coronavirus pandemic. But now China, they're seeing a resurgence of cases in Beijing. That is, they're doing some lockdowns, taking care of that, it seems. How will that affect moves to restart the economy there?
Well, it's certainly very significant that there is this resurgence in outbreak out of one of the markets in Beijing. Of course, Beijing being the capital of China, it would be extremely embarrassing to the Chinese government to have a significant uncontrolled outbreak in its own backyard. And so obviously there is very immediate action being taken to test and trace the folks who have been associated with the market where apparently this outbreak is thought to have originated. I think just as a generalization, the Chinese over the last 4 to 5 months have developed a very significant testing and tracing capacity, which is of course supported by the information that's available from the cell phones of Chinese citizens as to where they've been on any particular day of the week at any particular time. And so all of that information can be brought to bear to stamp out a potential outbreak pretty quickly. So they're obviously on top of it and determined that nothing is going to get out of control to the point where factories that have reopened are going to have to shut or small businesses are going to have to be closed again. They're going to do everything they can to prevent that happening.
Well, especially because they are seeing their economy start to recover. They don't want to have to shut down all of it again, is what you're saying. Then they're taking these necessary precautions. Ben, we're seeing some similar issues here in the U.S., new rises in some cases with some states. How will the U.S. deal with its own reopening, Ben?
Well, I think, you know, what you just said, that China doesn't want it. I don't think the U.S. wants it either. I don't think anybody wants to see us go through another series of shutdowns and lockdowns. We just got back those May numbers dealing with unemployment numbers, and we've seen more people starting to work again. We saw retail sales surge by about 17.7%. That was very good news. Nobody wants to go back. And so at this point, I think there's a lot of concern, certainly in markets. There's concern among politicians, and there's concern among business owners and the general public that we're going to go back the way that we just came, which is to go back into lockdowns and to restricting businesses instead of reopening completely. And as Jeffrey had said in the previous segment, you know, there's a lot of concern about whether or not a lot of businesses even get to come back at this point. A second round for businesses that are coming back, a second round of closures and lockdowns might certainly be, you know, the nail in the coffin if they do survive the first round. So it's not promising on any level to see kind of a resurgence of cases and then having to go back into these lockdowns.
John, what do you think? I mean, the economies have mostly reopened. They're looking to reopen. We're seeing a surge in cases. Is this in any way going to be contained?
Well, I agree very much with Ben that the forces of momentum are now with those who wish to reopen, and retrenching back to lockdowns would be extremely demoralizing to consumer confidence, as well as inconvenient and destructive potentially to many of the businesses who have been able to survive on the back of the short-term government support that has been provided. A second stimulus requirement of a magnitude similar to the first to cover off a second wave economic fallout would be extremely debilitating to the economy.
Especially because so many people have said that too much was closed in the first place. Now that they're starting to reopen, and even President Trump said he won't shut down the states and the country altogether. But hopefully there's this new treatment, so there's that potentially could help in these pre-trials. Hopefully there are other treatments that are also being studied, hopefully a vaccine. But again, all we can say is that we're hopeful for it, and only time will tell. John Quelch, Dean of the Miami Herbert Business School, and Boombust co-host and investigative journalist Ben Swan, thank you so much for your time. That's it for this time. You can catch Boombust on demand on the brand new Portable TV app, available on smartphones through Google Play and the Apple App Store by searching Portable TV. Stream us on your TV by on Apple TV and online at portable.tv. We'll see you next time.